Welcome back to the podcast, everyone. Today we're diving into the world of off-the-plan apartments in Sydney. To help us navigate this exciting but complex market, we have the incredible Helen with us, who's a seasoned real estate agent with a wealth of knowledge in this area. And thank you so much for being with us here today, Helen.
Thanks so much for having me again, James. Off-the-plan apartments offer a really unique opportunity for buyers, especially in this dynamic market like Sydney, as well as other markets in Brisbane.
And we'll talk about maybe some of the projects and examples that you've done and case studies as well later on. So everyone should stick around for that because Helen has some really great insights in the off-the-plan space. But before we do that, let's start with some of the basics for the listeners out there. Tell me, Helen, if we had to start at the beginning of the journey about looking for off-the-plan apartments, what exactly are we looking at? And specifically in Sydney, why do you think they're so popular?
So an off-the-plan apartment is a property that has been sold before it is actually built. The buyer purchases a property plan and then pays a deposit, often securing a future property at potentially a lower price than what they would be worth once it is completed. It is a really popular strategy for investors and buyers who want something brand new and want to buy something with all the amenities attached to that building.
So would you say there is a market for every buyer in the off-the-plan space?
Absolutely. You can get anything from $500,000 all the way up to $22 million in Bondi on the top floor.
And this is where it ties into the finance side, which we're going to touch on right now. We've mentioned there's an off-the-plan property for every type of buyer, whether it be high spec or luxury or mid-level. Obviously, that's going to influence the budgets and the financing that people take on, which is where I guess I fit into this equation of the deposits and the mortgages. So what do you think is the typical deposit requirement for off-the-plan purchases? And also, how important is it, from your experience as a sales agent, to have a mortgage broker like myself who can help the buyer navigate this potentially 12-month plus period of buying a property?
Gosh, this is so interesting. So typically you'd need a 10% deposit to buy something off the plan. However, some developers offer flexible payment plans. So it is worth noting that deposit bonds can be a useful tool for buyers, which is where you would come into the equation. And that will allow buyers to secure the property without having to pay the full 10% deposit up front. And just as an example, you could pay, let's just use round numbers and say that the apartment is worth $1 million instead of the full 10%, which would be $100,000. You can pay that partially in cash and the remaining using a deposit bond.
With deposit bonds, the benefit of not putting your money down means that technically you still have access to that 50K or 100K, for example, until settlement in, say, 6 or 12 months or even 18 months. So you can still earn interest on that. You can still spend it and use it for expenses. So you're only required then to be using the deposit or provide the deposit at settlement. Isn't that right?
1,000%. 1,000%, which is why it's really exciting that a lot of these transactions are happening in this space with deposit bonds.
As a trade-off to retaining that money, you're only paying a couple of $1,000s potentially to use that bond and effectively hold title to this apartment.
If you run the numbers for a buyer on a spreadsheet, the investors would just jump on this, knowing that they only need to pay 1% of the deposit bond amount that you want in order to secure it.
And again, when it comes to deposit bonds, Helen, you could be in the display suite, say during the week, for example, if you've invited some interested parties in, they're willing to commit. I would get the call, hey, this person wants to lock in their place. Can we get the deposit bond sorted? We can organize that within the hour. This is something that we can do with, just your information. I would obviously get involved to understand what the purchase price is, what the settlement period we're looking at is, or the completion period. And we can do a few things depending on, or we can structure it in a few different ways depending on if it's a long-term settlement, which would be considered over 6 months, or whether it's a short-term settlement. If you're already a property owner, we can have confidence that, okay, there's going to be a pretty strong argument to say that you're going to have the deposit ready by the time the property settles. Similarly, if you don't have a property or you're not a property owner, eligibility might be a little bit different. And that's where it becomes a situation of, how can we look at your finance? Have you looked at, the mortgages and the pre-approvals yet? What stage of the buying and financing process are you at? And that's where, Helen, I think we can have a really good conversation with the buyer, and we can help them get this property sooner rather than later, and not have to wait for the price to potentially rise by the time the new release of properties come out.
Yeah, and just circling back to the mortgage process, are there any specific considerations for off-the-plan purchases, James?
Some lenders operate in the space, some lenders don't. There are some criteria that we need to look at specifically for off-the-plan mortgages, because we're looking at a property that isn't established. So the risk could potentially be higher or lower depending on things like the area, the background of the developer, the sales history, that type of stuff. Now, when it comes to income verification, obviously this will depend on the buyers themselves. So we could obviously look at their income situation or their personal finance situation at one point in time, and then potentially 5, 6 months or even 12 months later, that could change as well. And so we have to react to what the market does at the time we need to settle it as well, because as much as we would like to use the information from, say, 12 months ago, we have to be realistic with ourselves, and we have to manage that expectation that obviously there is a time gap between when we apply for it and when we settle it. And so things like valuation differences, what price are we going to settle? Are we going to settle on the contract or on the valuation? And then there's a question of, okay, if we're settling on the higher of the two prices, does that mean we could effectively borrow 100% of the purchase price? Similarly, if it's less, the valuation comes in less than the contract price, how much more of a contribution does that buyer need to make? And so me as a broker, I will be following this up, not just from the initial conversation, but all the way through to settlement, because I know how stressful a settlement can be, especially when it's something that's gone on for 6 or 12 months, for example.
So here's a real life case study. I will have somebody for you that is going to settle their property in 12 to 18 months. How many times are you going to be contacting them between now and completion, which is in 12 to 18 months?
At the beginning, I'll be contacting them quite often, possibly multiple times a week, just to get them comfortable that, yes, there is a solution to this. And we'd obviously start off with the deposit bond first. Say if it is 12 to 18 months, like you've said, look, I don't want to bombard them with communications, especially when these approvals can only last for 3 or so months. But generally, talking to them at least once a month at a minimum would be a requirement. And that's not just because, okay, we're going to be submitting or we're going to be retrieving information every month, but it's more so to let them know of updates, what's happening in the market, updates that's happening in the policy side. Perhaps there's a change of lenders that we have to look at from the comparisons we initially gave. So the mortgage process really does take a little bit of time and care to foster up and nurture. Not to say that this would be the case for everyone. Obviously, established perhaps even existing clients who I already have that relationship with, yes, we can move a little bit in a relaxed manner. Although someone like in a first home buyer situation who's never done this before needs a little bit more education and a little bit more assistance. And so I have to tailor the experience to the customer profile.
While purchasing off the plan offer exciting opportunities, it is important to be aware of their potential risks. For instance, there may be construction delays that can happen. There's always a risk of the property not being built to the standard expected. And additionally, economic downturns can impact the property's value at completion, which will have an effect on how much you are able to borrow. And James can speak on this soon after. And obviously, changes to government policies can affect the off-the-plan space.
The buyer does have to do a little bit of research into the developer, the quality, the history of their construction, where the building's located. And it's no secret that the building and development game does have its fair share of scandals and issues. And it's no secret that the lenders are also aware of which developers they want to work with, which properties that developers have built that they will take on as security. As a broker, there's a certain degree of research that I also assist the buyer with, whether that is something to the effect of speaking to the lender about whether or not the security is on the building commissioner's watch list or it's got a rectifications order, whatever it is. Look, we've dealt with situations that have been disastrous. We've had customers who have come to us who has dropped the ball at the 11th hour, and we're probably about 3 or 4 weeks until settlement. It's move-in ready. The apartment is move-in ready, and I've had to step in and mitigate the issue, which at the time was the lower valuation. Unfortunately, Helen, as you've seen, valuations they do fluctuate, obviously between supply and demand, and then between economic factors as well. Being able to step in and provide a successful outcome in terms of being able to settle at that higher LVR because of the deposit we've had to make up for, whether or not it was because of the change in servicing criteria where certain incomes have changed over the course of time between exchange and settlement. Those are some of the disasters that we've had to overcome, or some of the hurdles, and thankfully we've been able to work with those parameters and provide that successful outcome. On the flip side, we've had situations where we've dealt with customers who have done their research about the property and developer. They're sure about their income situation, that their financial spending is going to be kept in check over the course of the assessment period. And for those customers, we've been able to do a really streamlined service, which has been overall less stressful because we've had the plan lined up for the last 12 months.
Yeah, I would say for the buyers that I've helped purchase off the plan with, I am in contact with them once a month, and I'm generally very, very conservative. So when I'm offering them products, off the plan products, financial products via you, I know that we're going to get a really good result. Like in the past 8 years, I have not been part of a disastrous off the plan purchase, either at the beginning of the purchase or at the end of the purchase. Everybody's always walked away really happy with what they've bought. And I'm really proud that I have helped people buy at a lower price, and come completion in 12 months, they've seen a rise in the price of what they've purchased.
So Helen, we've just spoken about some of the considerations that people need to make in terms of finance, and also some of the success stories that you've been a part of. But if you had to boil it down to the buyer profiles that you've come across, who do you think should be considering these off the plan projects?
I think we're coming into a time where the main buyer profile is downsizers and right sizes. And of course, people who should be buying off the plan are also first home buyers and investors. First home buyers can take advantage of the government incentives in place and also for potential capital growth, which I've been a part of for a lot of first home buyers in the past. Investors can also benefit from the tax advantages and rental income that come with buying off the plan. And downsizers, which I see to be the main purchases of and my focus moving forward, might find that buying off the plan is the most convenient way from them to, I guess, step away from their family home of 30 years into the next chapter of their lives, being it in Sydney or elsewhere.
What's the right sizer?
Right sizer could be your second or third time movers or expat. They cannot afford a $3 or $4 million home or even $5 million home in Sydney. So they buy an apartment, a 3 to 4 bedroom apartment in the $3 million range, which is quite large. They're sort of at like 150 to 180 square meters internally, which is the same size of a 4 bedroom house in Sydney. And also the downsizers are much pickier now. Instead of like downsizing to 2 bedrooms, I can't really imagine them coming from a really big 5 bedroom home into a 2 bedroom apartment. They do want 3 or 4 bedrooms.
Wow. And so this is a more mature customer base, wouldn't you say?
Yes, I would say that they've transacted in property many times before, but for their life stage.
So Helen, we've just spoken about the most common buyer profiles that you see. And I've just mentioned before that each buyer should be doing a bit of research themselves before they get involved in an off-the-plan project. But what do you think off-the-plan buyers should be considering in terms of what the project offers for them?
No matter what you buy, the location of the property and the amenities offered and the overall appeal of the development is a really important consideration, because all those 3 components add to the capital growth component of that specific property. They should also do a little bit of research on the developer and the project itself, taking a look at what's around in the neighbourhood, what's coming into the neighbourhood in terms of local government and infrastructure. In addition to that, I guess they should think about when the expected completion date is and the quality of the construction.
Okay, so things like whether it has a gym, whether it has a pool, whether it's close to schools, whether windows are double glazed, all of these things, they don't really change from when you would look at, say, an established property. Is that what you're saying?
Correct. I think the main difference between an established property and buying off the plan is the additional amenities that you have in the building that you wouldn't have in a standalone house.
Would you say that there's a feasibility aspect also involved in it, whether it's we've just sold our home, we're currently renting, and then we're going to have to wait for another year or so for our apartment to be finished? That's also a common consideration that these buyers may have as well?
Yeah, there's definitely that component, especially for downsizers. And, I welcome that because it gives you so much time to think about and you want to make that move. For example, I always ask downsizers, do you want to be in your home this Christmas? Do you see yourself here next year, next Christmas? And if they do, but they're still thinking ahead and thinking, oh, I really need to make a move in the next 5 years, buying off the plan is the way to go for them.
And the reason why I asked that is because I recently did a loan for someone who was in that position of we've sold our family home, looking for we've got our equity from the property, we haven't found anything, we've just moved out, we're in a temporary like a rental property at the moment, but we don't want to be moving out in 3 weeks' time because we found another property. So they actually went down that off the plan route because they were able to establish their lives again in a new place in another apartment, but they were able to buy and negotiate a good price on the one that we were talking about earlier, they're really happy with it. And look, the finance, we're able to line that up possibly early 2025 for them, just before they move in. Within that 3-month period, I think is good enough to give them the confidence that they can start preparing to arrange the funds to complete. And there's going to be conversations around what interest rates are doing, what potential fees, what type of structure in terms of whether we want to split the loan in part variable, part fixed, how long is the fixed portion going to be. Even though it sounds as though it's straightforward because you buy it now, wait and come back, I find that buyers are still really involved in and really intrigued and engaged when it comes to what they can do over the next 12 months until settlement happens. So,
Yes, I agree. And it's just so convenient for them. I think at that stage in your life where I see my downsizers, Ray and Deb, being in their mid-60s, it just makes sense for them to take that 12 months to figure out what they want to buy. Or if they've already transacted on something off the plan, it gives them that extra 12 to 18 months to slowly move out of their current house that they've been living in for the last 30 years, for example. It's hard, and I guess it's just good timing for the downsizers because it's not the usual six-week settlement, which is what we see in the resale market.
we hope you've enjoyed this topic and this conversation on the world of off-the-plan apartments. If it is something that you are considering, this is an exciting time to be looking in this space, especially in the Sydney and East Coast market. Do not hesitate to reach out to Helen or myself if you are exploring these properties and these financing options, because we are more than happy to have that conversation with you and go through the steps in more detail, provide more options, provide more figures and details so that you can have the information you need to make the decisions. And I know 2025 is just around the corner, and we're expecting a significant number of opportunities coming up in this space, and Helen and I are more than happy to facilitate these transactions. We will see you in the next installment of Navigating the Real Estate and Mortgage Landscape.
See you. Bye.